If you've been putting off opening a stocks and shares ISA because you don't know which platform to trust, this video is for you. I'm going to go through 5 platforms that I think genuinely deserve your attention in 2026, not because they paid me to say that, but because the fees, the features, and the account types actually stack up. I'll give you the real numbers, the pros, the cons, and who each one is actually built for. And yes, I've used more than one of these myself. Let's get into it. First up, Lightyear. This one's had a genuinely big year. Back in March 2026, they scrapped commissions entirely on UK personal accounts and dropped their FX fee down to 0.1%. And that's now one of the lowest FX charges of any platform in the country. For context, Hargreaves Lansdowne charges up to 0.99% on the first £10,000 you convert. Interactive Investor charges 0.75%. Even Trading 212, which markets itself as the cheap option, charges 0.15%. So if you're regularly buying US stocks, say a chunk of the S&P 500 or an individual company like Apple, Lightyear is about as cheap as it currently gets. There's no platform fee, no subscription tier, and you can hold a stocks and shares ISA or a general investment account with the exact same fee structure. Fund manager fees still apply on ETFs because they always do, no matter the platform. That's not something anyone can waive. They've also added vaults, which are money market funds that currently pay around 3.75% AER, so your uninvested cash isn't just sitting there doing nothing. Where Lightyear falls down a bit, there's no SIPP, no lifetime ISA, no junior ISA. If you want to consolidate your pension here, you can't, yet. And while the platform's clean and easy to use, it's built for straightforward investing, not for people who want in-depth research tools or complex order types. Pros: genuinely one of the cheapest platforms in the UK right now. Dead simple interface, decent interest on cash, business accounts available. Cons: no pension option, no junior ISA, still a fairly young platform without decades of track record behind it. Next, Freetrade. This one's actually changed shape more than once in the last 18 months, so if you looked at it a year ago and wrote it off, it's worth another look. As of early 2026, the free basic plan now includes the stocks and shares ISA, the SIPP, mutual funds, and UK gilts, all at no extra monthly cost. That's a genuinely rare combination. Most platforms make you pay a subscription to unlock a pension or an ISA wrapper. The catch, and there is one, is the currency conversion fee. On the free basic plan, that's 0.99% every time you buy a US-listed stock or ETF. Buy £1,000 of an S&P 500 tracker, and you're paying just under a tenner in FX alone. If you invest in the US regularly, the paid tiers bring that down. Standard, at just under $5 a month, cuts FX to 0.59%, and Plus, at just under $10 a month, brings it to 0.39%. So the maths here really depends on how much you're buying in dollars. If you're mostly buying UK shares and funds, the free tier is genuinely free. If you're regularly buying into US ETFs, do the sums before you assume free is the cheapest option for you. Freetrade was acquired by IG Group last year, which removes a lot of the "will this small platform still be around in 5 years" anxiety that used to follow the newer apps around. Pros: ISA, SIPP, and gilts all included on the free tier. Huge investment range, including mutual funds most challenger platforms don't touch, backed by IG Group now. Cons: that 0.99% FX fee on the free tier stings if you invest in the US often. No fractional shares on UK-listed stocks or ETFs. Third up is InvestEngine, and this one takes a genuinely different approach. They only offer ETFs, no individual shares, no investment trusts. If you're someone who wants to pick individual stocks like Nvidia or Tesla, this isn't for you. But if you're building a long-term, diversified portfolio, that restriction is arguably a feature, not a bug. On fees, the DIY option has no platform fee at all. Not on the ISA, not on the SIPP, not on the general investment account. You're only ever paying the ETF's own ongoing charge, which on some of their cheapest options starts from as low as 0.03% a year. Because every ETF on the platform is priced in GBP, there's no FX fee either. That's a genuinely underrated point compared to platforms that charge you every time you touch a US-listed asset. Fractional investing means you can put as little as £1 into any ETF, no matter how expensive a single share of it is. Their savings plan feature lets you automate a monthly contribution, which is what I use it for personally. The downsides: there's no interest paid on uninvested cash sitting in your account, so don't leave money parked here for long. Their managed portfolio option has had availability changes through 2026, so if that's the reason you're considering them, check it's actually live before you commit. And obviously, no individual shares. Full stop. Pros: zero platform fee on DIY accounts, no FX fees because everything's in GBP, true fractional investing from £1. ISA and SIPP both included free. Cons: ETFs only, no interest on cash sitting uninvested, managed portfolio availability has been inconsistent this year. Fourth up, and this is one a lot of you have asked me about, Trading 212. It's been one of the most talked about apps in the UK for a couple of years now, and the core pitch hasn't changed. Zero commission on stocks and ETFs, no platform fee, and an FX charge of just 0.15%, which is one of the lowest figures on this whole list. If you're buying US shares and ETFs regularly, that's a meaningful saving over the course of a year. You get both a stocks and shares ISA and a cash ISA on the same platform, which is genuinely useful if you want to split between investing and a safer cash buffer without juggling two separate apps. Their Pies feature lets you build a custom portfolio with set percentage weightings and then either invest as a lump sum or automate it, similar in spirit to Lightyear's plans if you watch that section. Interest on uninvested cash is paid daily, and fractional shares mean you can start from £1. The big update this year: Trading 212 finally launched a SIPP in February 2026, after telling people for years it was coming. Worth knowing before you jump in: Trading 212 doesn't run the pension wrapper itself. It's operated by a separate FCA-authorized provider called Gaudi, who charge their own fee on top, currently around $90 a year. There's also no drawdown option yet, so if you're close to actually wanting to draw an income from a pension, this isn't ready for that stage. You'd need to transfer elsewhere first. For anyone still in the accumulation phase, though, zero broker-side fees plus a flat $90-ish annual charge is still competitive against percentage-based SIPPs once your pot grows. Pros: rock-bottom 0.15% FX fee. ISA and cash ISA together, Pies for automated investing, now has a SIPP. Cons: the SIPP is run by a third party with its own separate fee. No drawdown yet, no junior ISA, no mutual funds, stocks and ETFs only. Finally, the name almost everyone's heard of, Vanguard. And I'll be upfront, I hold a SIPP with them myself, partly because they accept contributions from a limited company, which not every pension provider does. If you run your own business and want to pay into a pension from it, that's a real point in Vanguard's favour. Now, here's the bit a lot of older reviews miss. Since January 2025, Vanguard introduced a minimum monthly fee of £4 for any self-managed account, ISA, SIPP or general account, with a combined balance under £32,000. Above that, it drops to a straightforward 0.15% a year, capped at £375. So if you're just starting out with a few £100, £48 a year in platform fees is a genuinely high percentage of a small pot. This didn't used to be the case, and it's changed who Vanguard actually makes sense for. You're also limited entirely to Vanguard's own funds. No individual shares, no other providers' ETFs. That's fine if you just want a life strategy fund and to leave it alone for 20 years. It's not fine if you want any flexibility beyond that. Pros: genuinely rock-bottom fees once you're above £32,000, accepts limited company pension contributions, huge reputation and track record, decent junior ISA that skips the £4 minimum entirely. Cons: that £4 monthly minimum punishes smaller investors. Only Vanguard's own funds, no fractional shares, app still trails the newer platforms. So that's 5 platforms, 5 very different approaches. Lightyear if you want the lowest cost way to buy US and UK stocks outright. Freetrade if you want an ISA, a SIPP, and fund access all in one free account and you're not trading much in dollars. InvestEngine if you want a simple, zero-fee ETF portfolio with true fractional investing. Trading 212 if you want the lowest FX fee on the list and don't mind a small third-party charge for the new SIP. And Vanguard if you've already got a decent-sized pot and want dead simple, low-cost, hands-off investing, or you need that limited company pension contribution.
None of these are the one perfect answer. The right one depends on how much you're starting with, whether you're buying UK or US assets, and whether you want a pension in the mix. Do your own comparison before you commit. Fees compound just as much as returns do in the wrong direction. As always, when you invest, your capital is at risk, and the value of your investments can go down as well as up. If this helped, subscribe for more UK-specific breakdowns like this one. See you in the next video.